Welcome to the April edition of the Galileo Monthly Update. I'm joined by my colleague, Jenna Dixon. It's been a really interesting year, Jenna.
Yeah, Warren, I think we were all quite surprised to see the markets performing so well since the beginning of the year, especially that we're still dealing with COVID and impacts that it's having on our economy at the moment. What led to these positive market movements?
I think it's been a combination of factors. So it would be difficult to put it down to one thing. I think the first big issue is a trend away from developed markets back to emerging markets just in general. So global investors looking at the return that they can earn on their money, whether it be in Europe, the UK, or the US. And in most of those places, you can earn nothing on cash. And especially in American markets, a lot of the market is incredibly expensive there. So, investors are looking around and saying to themselves, where can we get a better return on cash or a better return on bonds, and potentially buy into stock markets that are offering better value than their home markets. And so we see this move to taking risk on emerging markets again. And I think it's important when we talk about emerging markets to understand South Africa, is an emerging market, of course, but we're not talking about South Africa being the main market of choice for global investors. That will definitely be China, Taiwan, South Korea, and then we fit into that. So we become one of the emerging markets, and we get some of the flow of money into emerging markets, and certainly that's been a driver of our market and also the rand. So I had a quick look. I have to check my notes here, but I think about a year ago now, at the end of March, the rand was around 17.90 to the dollar, and 12 months later, at just below 15, that's a huge improvement in the value of the rand. And I think that's important to understand. That's global investors looking for a return on cash, what they call yield. I think the other thing I looked at was what was the performance of resources, so the big mining houses, because we've seen a huge move back into resources as the big economies around the world say that they want to spend on infrastructure as a way to restart their economies after the lockdown the lockdown imposed kind of collapse of their economic growth all around the world. And a place like America, which really hasn't invested in roads and other infrastructure for decades, is now looking to do that with under President Biden. And then China has sort of restarted their big infrastructure drive again. What that means is we see a share like Anglo's, which is an enormous business, over 12 months has actually gone up by over 100%. So it's more than doubled its value in 1 year. And Billiton, up nearly 70% in a year. So I think that it's probably those two main drivers, Jenna, around emerging markets being one, and then the second specifically for South Africa, resources. We've seen some nice news around some of the smaller companies that really operate only in the South African economy, having fairly decent returns. And I think that's a case of survival of the fittest. There are lots of companies that have fallen over, lots of companies have delisted, and the remaining shares on the JSE, especially in the battered sectors like construction, the few that remain, they're really good, tough businesses now with very strong management teams that know how to deal with adversity, and they're starting to deliver good results even though the economy is weak. So I think I guess long answer to your question, but I think it's important to know that it's the difference between economic growth, which is not there right now, and stock market growth, which is specifically driven by a few key factors.
Thanks. And what are you expecting in the future? What are your thoughts in the next 1 to 2 years?
I think that the JSE is probably going to deliver good returns still for another period of time. Whether it's 1, 2, or 5 years, I'm not sure, but that will be driven by two things. One, the overall market in South Africa is not expensive. I think we're certainly not at the valuation levels of the tech sector in America, as an example. And I think also that this resources move is not over yet. When countries start to spend on their infrastructure projects, they don't do that for 6 months and stop. That takes them years to build roads, rail, ports, all of big buildings and the like. And so the demand for resources will continue for quite some time. And I think that will be very positive for the JSE as well. And then if we do actually see the benefit of any of our government's kind of reset and economic reform, then that will add to that momentum. So, for example, eventually, when the spectrum auction goes through for 5G and additional data capacity, that will be very positive. When they actually allow Eskom to unbundle and some of the new power that we're seeing coming into the economy, when that starts to unfold as well, I think that will drive the economy. And then lastly, that little C word, the COVID word. We need to see that vaccine rollout, which is being promised, actually starts to get traction. So I was hugely relieved to hear Aspen announce that they're going to be rolling out the Johnson & Johnson vaccine in South Africa. To have our own vaccine manufacturing plant in the metropolis of the Eastern Cape is important, because we get 30 million vaccines given to us directly. We don't have to wait for imports and for governments to release them from Europe or something like that. So I think we've got line of sight now of millions of vaccines that will start arriving in the month of April. And just the Johnson & Johnson vaccination drive gets us to close to kind of 30% of 30 million people, which is the bulk of the adult population in South Africa. So I think that's a really important factor that we need to consider. And the faster we see that roll out, the more we'll see kind of a change in sentiment, which is equally important to the other economic reforms that we need in South Africa.
And then, Warren, on that note, given how well the JSE is currently doing, are we looking to invest more locally for our clients? And also, just what are your current global views?
So this April's the month of tough questions, Jenna. Thanks. I think it's. I would say that we're focused on getting a proper diversification strategy for our clients. So it's not a case of being opportunistic because we believe there is value in the JSE that we're now saying to all our clients, okay, stop sending money overseas or bring back all your money from overseas and only invest in the JSE. I think that would be a mistake if that's the message that people are taking from this update. What we're saying is that the years of kind of lost growth that we've had in the JSE, we're now starting to make up for lost time, and hopefully that we continue to see those rewards. So if our recommendation to someone as an investor is you should have 50% of your assets in South Africa and 50% overseas, then it's important that the investor understands we're not changing that recommendation. It just means that that you should now feel some relief that you're starting to see double-digit growth from the JSE, and at the same time that your overseas investment strategy should maintain course. We shouldn't be deviating from that. So critically, if the rand is at 15 rand to the dollar or stronger, and you need to increase your overseas allocation, please do that. Even though you might think that the JSE will deliver returns, we also believe that. But at the same time, we've got a diversification strategy for a reason, which is that we think long term having a good exposure to international markets will help your overall portfolio, even if you get a nice uptick from the JSE in the short term. None of us know what the next 10 years look like, and we think that a nice big spread of investments across the world is really important for that diversification strategy.
Okay, great. And lastly, Warren, the Reserve Bank left the rates unchanged again. What are your thoughts on this?
I think that's it wasn't a surprise this time around. I think it was anticipated by most of us. I think it's good news because what the Reserve Bank is showing us is that their focus on inflation is important, and they are going to maintain that. But at the same time, they've got a history of often raising interest rates a bit too early, and kind of using a big hammer to drive in a small nail, which is not necessary in this situation. So we are hoping that they maintain this kind of attitude to the economy in South Africa, where they're saying we just don't have an inflation concern. The economy needs to grow a lot more before we're going to start seeing any kind of inflationary pressure. So if they keep the rates at these levels or even possibly lower them slightly, I think that's very positive. The reason why the Reserve Bank wouldn't want to lower interest rates too much is because that will actually have the effect of making South Africa less attractive for investors who are looking for an interest rate on their money. So what it could actually do is cause the rand to weaken, and a weakening rand creates inflationary pressure, and then we start a negative cycle of raising interest rates again. So I think that we've got a Reserve Bank that's got the right attitude at the moment, we desperately need as much economic stimulus as possible so that investors start buying assets with debt again. So in other words, buying property, investing in companies, and kind of restarting the economy where they can. And so that's a very positive move. And I think just as a closing comment for our clients, that are watching this, the political landscape in South Africa is always uncertain. It's always noisy, but at the same time, we are seeing more and more moves, in the right direction. So, at the time of recording, we've just found out that the ANC's NEC have enforced that clause where leaders within the ANC who have been charged with any kind of criminal acts must step aside, and they've been given 30 days to do that. That's a very strong enforcement of a policy that that the kind of the right part of the ANC has been trying to enforce. And I think it's another signal that we are in a position where kind of the Ramaphosa is flexing his muscles in the right direction, and anyone who doubts that needs to look at that NEC meeting, or the results of the NEC meeting, I should say, as an expression of strength. And so always political predictions are dangerous. As a business, we don't like them. But having said that, I think the signs are decent right now. And if we can get through kind of the rest of the year with very little load shedding, some economic reforms, I think we're in a very good position for recovering from the losses we've had. And then as a last comment, it's interesting to note, the JSE from March 2020 to now, end of March 2021, the JSE is up nearly 60%. And that's an astonishing number. But we just got to understand it was really low this time a year ago, as we'd gone into the first kind of big lockdown. And so, we're seeing very nice returns at the moment, but please don't expect that we get 60% over the next 12 months. It'd be lovely if we can, but I think that's highly unlikely as well. So for now, my conclusion is, let's maintain our overall planning strategy for your investment. So if your attitude or your financial plan requires you to have 50 or 75% of your assets overseas, please stay the course. Use the strong rand as an opportunity to do that. But at the same time, with your retirement money and your savings in South Africa, you can expect some good times ahead for a period of time, knowing what we know today. If there's new bad news, then we'll need to deal with that as it goes. But I would say it's one of our best monthly updates that we've had in terms of lots of good news, following quite a long period of bad news. So relief and kind of quiet optimism is the tone I've got for April.